The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 7th wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be, I'll get it out, pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest and the only way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down 35 points. She's trading at 18,501. We've got the S&P down 4 at 2182. Nasdaq Composite off about 5 points. She's trading at 5271. She or he, whichever it is you like to refer to. The Russell 2000, she is up 3 points, trading out at 1256. The DAX closed up 65. The FTSE closed up 21. You've got gold back $5 right now. Silver down 27 pennies. Light sweet crude up 61 cents, 45.44. We're going to have to peek in on light sweet crude. I think it's running right up into PS dailies, done out there. But we'll go ahead and check on that. Check on anything else that you'd like. Of course, you can send me a email, steve@tfn.com, inside the Tiger's Den. Just go ahead and send an instant message. That would be just fine. Keep me busy on this another day of, in essence, sideways moves out here. So, yeah, I'll take all the help that I can get. You know, you send me your requests, and then I get focused on that. And that, as Tom likes to say, is a beautiful thing. But right now, what are the markets doing out here? Let's take a look at some different time frame perspectives. In fact, let's do just that. Let's look at different time frame perspectives. Let's take a look at, let's see, what do I have in one of my tabs out here? I know I've got some time frame perspectives that we can look at just to keep this interesting. There we go. Oh, we could look at that. I don't want to do that. That's a lot to review, and so I won't do that. But we'll come right here. Let's take a look at the Nasdaq Composite. Strong like bull out here. The center portion of the chart, we'll go ahead and just simply blow it up, is really the one to be paying attention to. That happens to be these horizontal green lines that are on my chart out here. You'll see at the 52.93 level, you might ask me what has been the high so far this week. I'm going to tell you it's been 52.87. So 52.87 versus 52.93. You got to love that. And the reason why I say you got to love that is if we go back, these are horizontal trading ranges that we're looking at. Now, I will unscrunch it, technical term there. I'll unscrunch it in a moment. What I want you to know is see this big dashed line down here at about the 22.56 level? That's really the largest horizontal trading range boundary line, 34 points of contact at that price area. Give her a few pennies out there. And so, and we're trading right now at 52. So these horizontal trading ranges, they were formed eons ago out here, but yet look how well they are at being able to identify levels of support and resistance out here. Now, the Nasdaq Composite, we want to pay attention to this 52.94-ish, 52.93-ish area, is because if you do get a close above that, a comeback, a pullback, and a test of it, rejection, and a moves higher out here, then you're looking for a move up to 54.62 to 56.31 out there. So that's on the bullish side. The bearish side is relatively simple out here. If, in fact, this truly is resistance, you would anticipate at least a test of the midpoint being 51.24, or you could even move all the way back down to the bottom of that horizontal trading range, 49.55. Which one is it going to be? I don't know. That is the weekly chart as we take a look at the Nasdaq Composite. If I come over here and take a look at the daily chart for the Nasdaq Composite, and we just simply look at its advanced decline oscillator reading, very bottom panel of the screen, measuring 35.59. What you'll notice is that's above zero. 35.59 greater than zero. What does that mean? Oops. I don't know how I did that. What does that mean? That means that it is the buyers who are in control of the market. So we know where the upper resistance level is by looking at that weekly chart. It is clear as can be. We can also see that there's a support level. The one to really be watching, I would say, would be the 2000 high, 51.32. The 2015 high, 52.32. We're trading above that, so that's bullish. There's no bearish reversal signal that we have to hang our hat on at this stage here. So the Nasdaq Composite, I don't want to say it's all about the Nasdaq Composite, and we've got Apple, we've got Tim Cook out there, leading the charge, announcing new toys and whistles out there. Hey, how about that? If they do create a phone without a head jack in there, it's not going to be a phone that I'm going to buy. That's for sure. It's not that I don't mind upgrading new things. I've got a great set of headphones. They're in my ear right now. I mean, and I've had these things for what seems like forever, which is a long time forever, but I've had these for a long time. But these are the types of headphones that, musicians, of which I am not. You don't want me to actually sing or play an instrument, but I can tap dance, so I could do that for you, the old soft shoe out here. But these headphones are extraordinary at canceling noise when you're flying and giving you the absolute best, crispest sound out there, and they are not wireless. And I'm not going to go spend the money to, they don't even make, they will not. Well, maybe they do make these as wireless. I don't think they do. I don't think that Shure does. But even if they do, I like these buggers, which were like $500 or what have you. So in any event, I don't know what it is they're actually announcing out here. But with regard to the Nasdaq Composite, it is strong like bull. So the weekly, we know where the resistance is. We know we want to be paying attention to that. Hey, on the short-term chart, if we just simply, and I do say short-term, I mean, we're talking about the 30-minute chart out here for the NQ, just as I had described to, let's do this here, as I had indicated to subscribers earlier this morning that if you were inclined to go ahead and short the market, that in the NQ, it gave us the signal. Gave us several signals out here. One of those was that price got right up to the top of the consolidation zone, 64 points worth of consolidation. Now, all that we have seen thus far, subscribers, is a move back to test that oscillator unchanged line. So price is held as support. We're just kind of moving sideways. If we get below that oscillator unchanged line, priced out at about 48.09, then you would anticipate perhaps a move all the way back down to the bottom of that consolidation. And speaking of subscribers, I'm going to be doing another workshop here this coming Wednesday. So not today, but a week from today, an extraordinary workshop. The last workshop, what we did was we learned how to master the Japanese candlestick signals out there, and that was really important. And the workshop before that, it was the oscillator unchanged line. I just happened to refer to it. Now we're putting all that together, and we are going to master the Gartley patterns. We're going to master how to trade some of the Tom DeMark systems out here, TD setup, TD combo, TD sequential. And, of course, we're going to take a look at that price relative strength divergent pattern. That's next Wednesday, and you can sign up at the homepage of TFNN.com. We'll be right back, folks. My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD setup, TD sequential, and TD combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and to reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 37, S&P down 4. Nasdaq is off about 5 points as well. And there was a question that was posted in the Tiger's Den here, just as we had gotten started, from Tammy. Tammy, nice to see you. Of course, I can't see you, but nice to hear from you. She was asking, and I don't know the answer to this question. Maybe somebody out there does, and they can go ahead and call in and tell us. But she was asking if there's a way to short the XLY, I'm assuming, which is the consumer discretionary ETF out there for the S&P 500. And I'm assuming she was really looking for an inverse ETF. Excuse me for a moment. Probably to trade inside her IRA account. So I don't know the answer to that. I'm not familiar with one, but that does not mean that it doesn't exist out here. But since she had asked the question, let's just go look at the XLY anyways and see what it is that we can see out here. At least let's assist her in trading this vehicle. So now, not unlike the rest of the market that we have been seeing out here. Oh, boy, I really have something in my throat. Sorry about that. I don't really think you want me hacking all over the microphone and then into your ear out there. So I'm going to try to keep it at bay. But if we take a look at the XLY, one of the things that we can see out here, well, first you can see the sideways action that has been in place since the breakout, quite frankly, of July 8th. Now, July 8th, you had 7.4 million shares to the upside out there. So you want to be paying attention to that 7.4 million number out there. In fact, you were moving topside on July 7th with 9.2 million shares out here. With regard to market profiles, Tammy, just in case you don't have them out here, you'll want to go ahead and note these down on your pad of paper. Resistance up at the upside. Oh, boy. And we got 7 minutes to try to make it through this one. To the upside, you had 8203 as your significant resistance level out there. You've got to the downside 79.67. So what we know about the XLY, it has been pushing lower with light volume, right? We say we're going to pay attention to 7.4 million on July 8th. First time down 3.8 million on August the 3rd. Next time down 3.5 million on August 31st. The next day 5.4. So moving lower with some light volume out here. That says we might see a bounce. Now, if we take a look at our TAS daily profile numbers, Perhaps that bounce here, Tammy, takes you up into 81.44. That happens to be the top of its daily box. Unfortunately, the daily box out here, and let me go ahead and turn off price. That way you can even see it clearer. It's not really tipping its head or its hat or its hand, I suppose is really what I should say, right? I'm going to turn off the weekly profile. And then you'll see the daily. And we can see pretty much an equal distribution here. So it's right dead smack in the center. So it's not even giving you something here, a piece of information that would really be helpful. Other than the fact that we have a daily profile that is formed below the previous one, but let's say 80.43 is going to be a level of support. So whether or not it's worth the reward to risk, I get it. I see why you would want to trade it. I most certainly do. And that is because if we take a look at the price oscillator, we know that it's falling because it's below Stevie's red line. We also know that we had a bearish cross take place about 6 or 7 days ago. So as long as this doesn't close above 81.29, I know 81.44 was that profile high. So we'll say 81.44 will give it just a little bit of conservatism. As long as it doesn't close above that, there's nothing to indicate just how much lower it will go. We just know it's pushing lower with some light volume out there. So hopefully that assists you at least with regard to what it is that I see or don't see on the charts for the consumer discretionary sector inside of the S&P 500. I wanted to go ahead and turn my weekly profiles back on. So, Tammy, if I do run across or somebody sends me a message, tells me of an inverse ETF for the XLY, we'll be sure to pass that along to you. Now, when we began the show, we were taking a look at, just as an example out here, we were taking a look at some different time frames. Well, we got to go take a look at the IWM. Russell 2000, which is up 3.5 points, is up 37 cents inside of the ETF out here. This is the daily chart. There is just absolutely nothing bearish about the Russell 2000. Not a gosh darn thing out here. And I'll show you something else out here. We'll just turn this to the weekly chart. Yeah, you are seeing an A to B equals CD to the upside. It is on Stevie's chart software out here. And what you've got, for those of you that say there's no volume in the market, it's sort of true. However, with one exception. If we take a look at the B point, the B point of an A to B equals CD. You want to learn how to master the D point. If you'd like to learn how to master the D point, then come on over to the homepage at TFNN.com. Sign up for my workshop, which is going to be a week from today, next Wednesday. Don't worry if you can't be there live. It's at 5 to 6. No frets. It'll be on your members page for the next 30 days. And really, in the Gartley pattern, the whole Gartley pattern is about learning how to master the D point of an A to B equals CD to the upside. Well, in this case here, with regard to the lack of volume or supposedly, we would look at the B point June the 6th. Week of June the 6th, by the way, the IWM generated volume of 132 million shares. And you know what? On the week when that swing point was taken out, it was taken out with volume, 142 million shares. So what does that say? That says to me, the Russell 2000, the IWM, first of all, could care less whether interest rates are going to go up or not. It's just shrugged off that information, and instead it wants to do its own thing. It's invited you to a party that's going to take price up to at least the 133.19 area. That would be the completion of the 1-to-1 A to B equals CD. And what that'll also do is that'll take us up into, and we might be, no, we're not there yet, into the swing point from June of 2015. But what it wants to do is it wants to try to take that out. But one step at a time. The first price objective is going to be 126.82 until some kind of bears sellers show up. But they just simply are not there. Of course, Tammy, speaking of the XLY, that would mean that what we would want to also do is go take a look at the SPY out here. And, yeah, you're going to see the same kind of setup out here. Of course, you got a TAS weekly profile that is resistance, which is at 219.60. So that's an area of resistance out here. But, if we turn that off, and we just take a look at the old lightning bolt out there, that old A to B equals CD out here. And, of course, you might say, yeah, but there's been no volume in the marketplace. I would say, well, not so fast out here. Because if we look at that B point, and it's a beauty, it's on the trading session here of June 6th. It's got a high of 212.52. It had volume of 379 million shares. And when it was passed, 461 million shares out there. So what does the SPY have? And folks, this was where I was struggling in my mind to figure out how in the heck is the market going to top on Friday. because we've got confirmed A to B equals CD patterns out here on the longer term charts. What was it that I was missing? And I went back and figured it out. It's like a puzzle. It's like playing, I don't know, not Rubik's Cube, but of course that is a puzzle out here. The markets really are a puzzle, right? And what we do here at TFNN, we utilize all these different techniques that help us put this puzzle together. The most important thing, though, is we're not, Humpty Dumpty who sat on a wall and Humpty Dumpty who take a great fall, or at least with regard to me, I am always willing to take new information when the market gives it to us. And at this stage here, the market isn't giving us new information other than, hey, it likes to just move sideways out there. But it's got it confirmed. AB equals CD to the upside. There's no other way to slice it. That price projection, by the way, 230.08. So be careful, Tammy. Be careful at this stage. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. NADEX, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their trading platform. NADEX never charges a fee to use their platform, which even includes real-time charts and full customization capability. NADEX's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. NADEX's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom OBrien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Not a lot of movement in the market. Apple's down 23 cents out here. If we take a look at it, you can see Apple had been, this is a weekly chart, by the way, that we're looking at, had been trading in a descending price channel, broke out of that with some conviction. If we just simply take a look at wide-ranging bars out here, but it's just been trading sideways. Let's put this on a daily chart. Let's go take a look at some market profile data. Let's go ahead and turn that little button on. see what it says out here. And so the current set of profiles, you still have price trading above the daily, which formed, it looks like 3 or 4 days ago. The top of that box is 107.41. We're trading at 107.42, so it's not like we're really trading above it, but we are by a penny. On any pullback here in Apple, let's just say that investors are just dismayed with whatever it is. Maybe they're like me. They're like, I don't want you to take away that. I don't know that they are going to. That's just the talk of the town, right? They're going to take away that little, jack for your headphones out there, or whatever. Price should find support at 105.47. There's really no problem inside of Apple until you see it close below 105.47. And we're not there just yet. With regard to, I mentioned earlier when we were opening up the show, we were looking at light sweet crude. It was up trading at about the 45-44 area. So we're going to go ahead and take a look at light sweet crude because it is truly trading right into resistance. Now, I think it's important. This, by the way, is the light sweet crude contract out here. Red line being that all-important Stevie red line, the kind that you want to pay attention to. That is that oscillator unchanged line, and it is priced right now. Really, we're trading like right on it. So you say, what's that price? I'm going to go with the 45.44. It's really right in that general area. You want to see a close with conviction above it. But if we do get a close above that area out here, then all of a sudden you've got an A to B equals CD to the upside. That would be setting up. And because it's already completed, in essence, right, an A to B equals CD to the downside. If we take a look at it, you're out here. Here's your A point, your B point. I don't even know what day that was, but you can see you did a 1 to 1.618 A to B equals CD. I'll tell you what days they were. The A point out here, as soon as I get my cursor here working, your A point out here was on August 19th. Your B point was on August 24th. Your C point was on August 26th. So what light sweet crude did was, completed a Gartley pattern, but no bullish reversal signal out here. So it's tepid. It's lukewarm at best out here with regard to a trading signal. And then prices really run right up into resistance. 45.41, I can see the number now, is really where it's at. But you get a close above that, and then price is going to move higher. It's going to at least move into that 48.46 at the upper boundary line, which is the previous swing point, down to 46.94 out there, and that is light sweet crude. But as I was saying, if we do get above that level, well, it opens up the door for an A to B equals CD to the upside. We're not there yet, but if that's what occurs, then we would go ahead and take a look at that. It's Super Mario. Screen says Super Mario game coming to the Apple App Store. Big deal out here. That apparently must be a big deal. In any event, so that's Apple. I'm sorry, that's both Apple and it's light sweet crude out here. What else can we really look at? That I don't see any emails out here. Here, a conversation earlier that I had. Let me just put this 30-minute chart here for Goldilocks up, and just made a perfect seventh wave move out here at midnight. So you've got, and now what we're seeing is you've got an A to B equals CD to the downside, right? So we've got from midnight down to, it looks like, let's see, where's our B point? Looks like 4:30 this morning, a little retracement up into about 9 o'clock this morning, and now we're sitting here at the 1 to 1.272 type area. This is a 30-minute chart here for gold. Now, what we don't have here is we do not have any kind of bullish reversal signal. So therefore, gold may extend itself to the downside to set up on a 30-minute basis its next Gartley buy pattern. We're not there yet. The next level to the downside, 1344 to 1346. You're trading at 1348, so it's not that much. Of course, below that, you start looking at 1340 would be a number. Of course, if there is going to be any kind of a Gartley pattern, price will get back above its oscillator and change line, so it's still turned down, and that's priced out at 1351. Now, the question is, are we above zero or below zero? And, the easiest way for me to determine that is to go ahead and turn on another tool. Let me go see where my little convergence has taken place, and or if it has. Where is it? There we go. Turn this to true. Go ahead and apply that. And it is still above zero. See, you got these three lines coming together, so this is kind of interesting. Now, here's the setup, short-term wise, with regard to light sweet crude. See how we got this little convergence of lines that are forming here? You got your oscillator and change line and two other in this case, exponential moving averages. So looks like what's going to, the question is gold going to pull back up into that little convergence out here? Normally, that's what it would do. So I would say that gold could move higher. And I don't want you to be faked out by this. I want you to be watching it. Because if, in fact, that's what ensues over the course of, let's say, between now and midnight, or whenever that time period is, between now and our next I would say between now and our next meeting, but I can't say that because that's not going to be till Monday. I won't be with you tomorrow, on Thursday, nor Friday, so I won't be able to we'll talk about, hopefully somebody reminds me, we'll take a look at how this actually played out here. But you want to watch so we can see that convergence, and typically price will move up into a convergence level. To make a determination, it's kind of like a our descending price channel, or rising price channel, or a consolidation out here. In a break of it, you come back, you retest. In this case here, if in fact gold moves up to about the 1354 range, the convergence comes together, which is likely what would occur, and then it deflects back to the downside out here, tells you we've got lower prices. You could say, oh, Steve, yeah, I didn't need to go to become a rocket scientist to hear that, to tell me if it deflects lower, prices are going to go lower. No, it's a really important aspect with regard to how price handles this little convergence area. Likewise, if price continues to move south, which is a possibility out here because we don't have a confirmed A to B equals CD, we don't have a Gartley buy pattern. So if price does move south, creating that convergence, expect it to stall, and then expect it to actually come back and test Stevie's red line. Now, you don't know where the two twains shall meet, if I can say that, whether it's price moving up or whether it's the oscillator and change line moving lower, or the combination of both out here. But a very interesting pattern going on inside of your friend and mine, and that is Goldilocks. Okay, so if I want to get this off my screen here, that's what I have to do. Okay. So it takes care of gold. Not a lot of cards and letters out here. If I take a look at, so everybody must be enthralled with something else, which is makes a lot of sense to me. You got a market that's still moving sideways out here. Please answer XOP question. Oh, okay, I will do that as soon as it gets posted. But I've got a question coming up with regard to XOP. So let's go ahead and put that in to the chart out here. XOP happens to be the SPDR S&P Oil and Gas Exploration ETF. And let me come over here and take a look at my daily chart here on another system so that we give a thorough review of the XLP. But first, we're going to start with our charts out here. And I don't see the question necessarily. Well, I'll look at the question because we're going to break out here, which is this. Bought XOP at 34.50 on August 30th. Exit XOP at 37.80, trade at 38.10 at the highest. Is XOP rally going to extend? Excellent question. Let's go answer that when we get back from this break. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we're taking a look at XOP, the S&P 500 Oil, Gas Exploration and Production ETF. And here's what we know. First of all, in the weekly chart out here, formed a really nice bottom. One of the tools that we will be reviewing in next Wednesday's workshop and how to trade it is Tom DeMark's, part of Tom DeMark's system, TD setup, TD sequential out here, which is what we received, which is a signal that was generated out here on January 8th. And you watch how price trades right around those signals when they form out here. So it formed a real nice bottom several weeks later, a month or two later out here. And if we take a look at this stage, where are the levels of resistance to be paying attention to? There's one in particular right now that you want to focus on. The question that was posed to me is XOP really going to extend? And we can take a look at a couple of correlations that are involved with regard to the XOP. But here is the possibility of a B point. We talked about we looked at different A to B equals CD patterns inside of the SPY, inside of the IWM. And right here is one of your resistance zones. That happens to be a little shooting star candle, right? That's going to occur as prices are moving higher. It's the opposite of the hammer candle when prices are moving lower. Now, that's your swing point. That's the possibility of an A to B equals CD to the upside out here. But you would need more than 70 million shares. You would like to see more than 70 million shares as price gets above 38.28. 38.28 is that first nut. You're at 35.22 as we speak right now, I believe. Yeah. We're at 38.11. Where are we trading at? We're trading at 38.11. My apology. So, and volume-wise, 18 million we're at. Now, the problem is this week, right, we got a shortened trading week. So you just got to kind of divide by 4, multiply times 5 kind of a deal. So you're at 20 million. Let's say you do 20 more on the next few days, so you're at 40 million. So 40 divided by 4 is 10 times 5 would be 50 million. Says you're going to come up a light, right, which is, I think, what Bill was saying right there. Yeah, he was saying light on volume. No question. It'd be like 50 million versus 70. But you got to really watch to see how it plays out. Now, that's one possibility. And there's also a little bit of resistance up here at this bearish engulfing candle on a weekly basis. So you've got some resistance at 40.28. But what I can say, Mr. Z, is that if you clear 40.28, you've got clear sailing all the way back up to its highs out here from April in 2015 in the $56 type area. Okay, so that's the resistance wall. Let's take a look at the daily chart out here. The daily chart, that same swing point, by the way, was June 8th. That had volume of 7.2 million shares. Today you're up, 15 million shares. Excuse me. 15.7 million shares. And today you're up with 7.2. 7.2. Oh, I don't have my screen up to do that. I can do this here. So you're at equals 7.2 We've been trading 9, 3, 10, 11, 12, by basically 4 hours. So 7.2 divided by 4 times 6.5. What is that going to give us here? It's going to give us about 11.7. So you're even light on the daily swing point up here. So you'd have any close below 38.28. The daily chart would give you a rejection on price and volume. Of course, you'd really want to see the true rejection would be a close below 37.13. Let's take a look at the daily profile, see if they provide us with any kind of assistance out here. Give me a moment to put those up on the screen. Let's go see where those levels of support and resistance are. And let's turn this off here. We already know where the swing point is at. And price is above the daily. It's above the daily profile. So as long as price, in this case here, right, you can see a brand new daily profile. Price is above it. That is bullish. We know we're going after a swing point, albeit on light volume out here. But, of course, the XOP is going to be influenced by oil. So if oil, as we were taking a look at, actually is setting up A to B equals CD to the upside, closes above that oscillator and change line, then the answer would be, yeah, this absolutely could go ahead and be setting up move higher. Now, we can see out here, or I can see, you'll see it here just in the nick of time in a moment. I'm going to get rid of this. We're going to go ahead and turn off a couple of things as well. And we're just going to draw in the current consolidation box, right? So if we take a look at the beauty of these patterns out here, let's just look at the conservative consolidation box, which we're really already above that level. That, too, is short-term bullish. So that would then give you a breakout of this consolidation. That would set up a move equal to or greater than, and that says easily, not easily, but this thing could not just go back for its highs in 2015, but maybe it wants to tackle the 42.49 area. So that looks pretty promising. If I switch over to my other daily charts, let's go see if there's anything else out here. You've got price above its oscillator and change line. That's 37.67. Staying above that is absolutely short-term bullish as well. So you'd really then say, well, what other things do I need to look at out here? And there's really two. The XOP happens to be at the top. The center panel out here happens to be light sweet crude. So there's no question we can see a directional correlation between the two. So you're going to want some confirmation that, in fact, light sweet crude wants to go ahead and trade higher. And then, as Larry has pointed out, and well, you know, and wisely is the word I was looking for, pointed out, you've got a correlation between the Canadian dollar, the loonie of all things out there, and light sweet crude. The truth is there are two currencies that impact light sweet crude. The other is the Mexican peso. So for those of you that trade light sweet crude, it might be worthwhile for you to go ahead and take a look at those two currency pairs. I only have the Canadian dollar up here on my screen. I'm not seeing anything significant here Canadian dollar-wise that suggests that it doesn't want to move higher. Light sweet crude, just let it take out that resistance level. And if both of those things are happening, well, then I say the answer is absolutely XOP can move higher. So that is my thoughts out here on the XOP. That's a Spider S&P Oil and Gas Exploration Fund out there. Okay, let me see if there's any other questions that have arisen out here, anything by email. And if not, then so be it. Just a quiet day. Doesn't look like it out here. Oh, wait. I take that back. There we go. Ron is asking about cattle. Okay, so can I look at cattle for me going forward? Thanks, dude. And I think you're the bomb, too. Now, live cattle, Z, what's the, because I don't trade live cattle, what is the live cattle? Is it LC? I'm going to guess out here. Let me see if we can pull that up on our screen. Is that the, let's see here, we've got LC. Let me just go to the continuous contract for the moment, see if we pull that up. Is it? Yeah, live cattle. There we go. So, interesting. Now, this is the continuous contract that I have up on my screen out here. So look at it going forward. I don't know. Let me see if I can actually pull that up on one of my other charting tools as well. So give us a moment, a little pause out here. Do I have? I should have live cattle. Why wouldn't I have it out here? But if I don't, I don't, and I won't be able to. Where is it? Where is it? H, J, K, L. I know where L fits, and I don't have it. How about that? I do not have live cattle out there. Okay, so that being said, Let's take a look here. Let me put this on a weekly chart. Let's take a look at a longer-term time frame. Let's see what kind of patterns we have out here. So there is a couple of A to B equals CDs to the downside out here. LE is live cattle futures out here on the Thinkorswim platform. Yeah, LLC for live cattle futures. This is Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by NADEX will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Right now we've got the Dow. She is off. I tell you, if I could have that page up here, off about 32 points. So not really any movement in an entire hour that we have been together. S&P maybe by a point or two. The S&P is off 3. The Nasdaq Composite is down 4 points. So back to the question with regard to live cattle. Yeah, we do have a more accurate chart up on my screen out here. So thanks for, I think that was Mr. Bill. That was my acting as my wingman there. This happens to be the weekly time frame chart that we are taking a look at. I was trying to see, there appears to be a butterfly pattern that is forming out here. You might say, what What do I mean? We're just take a look at some Fibonacci expansions out here between this swing point, the week that began September 28th, all the way out here to the swing point from March 14th, and actually well below the 1.618 expansion out there. If I take a look at, but you got a decent candle so far that is forming. I'm going to look at the daily candle. It's really the daily candle that I believe that Ron is looking at. So let's put the daily candle. This is the current contract, by the way. Let me get rid of that Fibonacci expansion out here. I'm going to try to. Come on, where is it? Oh, I'll be a son of a gun. This is not the chart I was looking at. It was this right here. There we go. Okay. So now here, this is the information that I can provide to you, Ron. You've got a nice bullish signal today that clearly is at the completion of several different A to B equals CD patterns out here. So you've got a nice old bullish engulfing candle inside of the live cattle futures. This is looking at the October contract out here. So where is it that price is likely to bounce to? Well, there's a couple things that you can look at. First, I would be looking at the bottom of the TAS daily profile, which is 108.59. That's the first area. Second, I would take a look at retracements just simply of this C to D leg out here. And as we take a look at it, that's going to be from the swing point from August 4th, from that high down to the low of yesterday. So the very first stop on the elevator on the way up, if it continues to move higher, it's going to be 105.85. That is your 0.382 retracement. The next level and the likely level where you will see cattle futures head to is going to be 109.86. Now, to trade this, it becomes relatively easy since we're at the end of a pattern. You would close this out if you see a close below yesterday's low, which is $99.37 out here. If we put this on an even shorter term time frame, such as a 30-minute chart out here, let's see if there's anything that shows up. We want to go ahead and turn off these profiles so that those are not in our way. We want to turn off the Fibonacci retracement there. Just seeing here, Ron, if there's just really, the only other thing that really sticks out to me would be a trend line, and the trend line is probably, something like this. Right in this range out here. Now, the trend line on a 30-minute, I'm coming from what looks like about a price point of 115.42. That's at about 9:30 in the morning on August 15th. And then just kind of lined it up with the swing point areas, the highs from about 9:30 on August the 31st out there. So that, too, could be a level of resistance out there. So I hope that helps you in taking a look at live cattle futures out here. So I see Rose also has a question about, and we only have about 15 seconds, but let's go right to it. BMY, see if anything sticks out here for BMY. Wow. What I can say about BMY, I don't have the volume up here, but right now that is Bristol Myers Squibb. This thing formed a hammer candle a couple of days ago. And that was September 2nd. So I will say, Rose, at this stage here, I'd really have to analyze this further. You don't want to see this get below 55.11. Otherwise, the route to the downside on Bristol Myers Squibb will get all the way back to those August 24th lows, about 51.82. Folks, have a great Wednesday. Won't be with you on Thursday or Friday, but be safe, and I'll see you on Magnificent, Marvelous Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.